When I first heard Eric Jackson outside Drake's house talk about a rising dynasty of retail investors, it immediately clicked with me. It summed up what has been quietly happening around Opendoor and a handful of other stocks for months. People aren't just watching tickers anymore, they're participating, discussing, and shaping narratives in real time. The OpenArmy isn't just a catchy hashtag, it's a community of investors who, for better or worse, have weathered wild swings, harsh headlines, and institutional skepticism because they believe in the long-term vision of the company. Today I want to step back from the daily price action and look at what that actually means, how a group of ordinary shareholders can influence the trajectory of a company, and why the current moment for Opendoor is a powerful example of this shift. Most of you know the price has been volatile lately. We've had some brutal red days, followed by relief rallies, and more than a few shakeouts. That's par for the course with a stock in transition. But what stands out isn't just the chart, it's the consistency of the conversation. Even when things looked bleak, retail holders were combing through SEC filings, transcribing interviews, and sharing their own due diligence. Instead of just venting about losses, a lot of you doubled down on research and on asking the right questions. That's exactly what Eric Jackson meant when he said the middle class is tired of being stuck with soft strategies from Wall Street's ETF machines. For decades, financial institutions have built products that clip fees, suppress volatility, and keep people parked in index funds, safe, but not life-changing. Jackson's argument is that a small number of well-researched, high-conviction bets can actually change someone's economic trajectory. It's risky, but it's also empowering, because you're making decisions yourself instead of outsourcing them. Opendoor is becoming a case study in how that looks at scale. Remember, this is a company that has reinvented itself in the last year. New CEO Kaz Nejatian came in from Shopify with a mandate to reset strategy, lean into AI, and make the company both faster and more disciplined. Keith Rabois came back as chairman with a very public focus on cost control and real productivity. Within months, we saw headcount reductions, a new emphasis on in-office work, and a steady drip of internal innovations like Opendoor Assistant and the internal MCPs Kaz just tweeted about. All of these are aimed at making the company more efficient and customer-centric at the same time. That's not just corporate PR, it's a roadmap that retail holders can track quarter by quarter. Then you have Jane Street stepping in with a 5.9% stake, over 44 million shares disclosed in a 13G filing. This is one of the most sophisticated quantitative trading firms on earth, managing over $140 billion and responsible for about 10% of all North American equity trades. They don't buy large stakes in small-cap disruptors by accident. Their algorithms scour data and liquidity. Their models price in scenarios most of us can't even see. When a firm like that puts a chunk of its own capital into a name like Opendoor, it's a signal that they see something in the fundamentals or in the asymmetric upside that mirrors what a lot of retail believers have been saying for months. In other words, the people with the best math in the room just made a bet in the same direction as the OpenArmy. That alignment is important because it undercuts one of the usual criticisms of retail enthusiasm, that it's just noise until institutions validate it. In Opendoor's case, retail holders actually led the conversation, agitated for leadership changes, and stayed vocal even when analysts and mainstream publications were skeptical. Only later did a major quant firm come in and effectively endorse that thesis with real money. This is what makes Jackson's Rising Dynasty line resonate. It's not just a motivational slogan, it describes a power shift where ordinary shareholders, by being coordinated and informed, can influence a company's culture and attract talent and capital. Look at how Kaz himself has responded to the community. He's on X engaging with posts about product ideas, sometimes deeming people directly. He publicly acknowledges the OpenArmy and shares glimpses of internal projects in a way most CEOs wouldn't dream of doing. His tweet about insanely awesome talent leaving big tech to join Opendoor is a direct signal to the base: we're building something world-class here, and you're part of it. That kind of transparency builds trust over time, especially in an industry like real estate where transactions are big, infrequent, and emotionally loaded. If Opendoor can reposition itself not just as a transactional platform but as a brand people associate with home ownership inspiration, as that prototype for a content-rich mobile app suggested, then it starts entering the consumer's mind earlier in the journey. Zillow built a giant audience on window shoppers. Why shouldn't Opendoor do the same and then convert that attention into transactions? That's the kind of long-term strategy retail investors can get behind because it expands the company's addressable market. All of this also points to why staying power matters. We've talked a lot about volatility and patience on this channel. If you're long on any disruptive stock, you have to be able to wear the long days. It's like that Spartan metaphor we used earlier, holding the line under pressure so the bigger vision can play out. Most of the big gains in tech history came not from trading in and out but from identifying an inflection point and holding through noise. Retail investors in Opendoor have already shown they can do that. Now, with institutional money like Jane Street's entering, the payoff for that patience may be starting to materialize. Of course, nothing is guaranteed. There are still risks in the housing market, interest rates, execution challenges, and competition. But part of what Jackson is telling the OpenArmy is that being early, informed, and engaged gives you a fighting chance to capture upside that index investors will miss. It's also about reclaiming agency. For years, the narrative has been that the little guy can't compete with Wall Street's speed or resources. Yet here we are, seeing a retail-driven movement around a real estate disruptor, influencing management, and now being joined by one of the most formidable trading shops on the planet. That's not a coincidence, it's a blueprint. It's also worth remembering that this retail energy doesn't just help the stock price, it can help the business itself. When thousands of shareholders are also customers, advocates, and beta testers, you get a feedback loop that money can't buy. It's like what happened with Tesla in its early days, where owners and investors became evangelists who built the brand's credibility before the mainstream caught on. Opendoor has the chance to harness a similar dynamic if it keeps engaging openly and executing on its vision. And there are signs the company understands this. The push toward AI-driven internal tools isn't just about cutting costs, it's about speeding up workflows so employees can focus on high-impact work. In a competitive housing environment, being able to process data, evaluate properties, and serve customers faster could be a decisive edge. At the same time, the move back to in-office work suggests a desire to build a tighter, more collaborative culture, a place where that new insanely awesome talent can ship products quickly. All of that aligns with the kind of discipline Keith Rabois has been advocating publicly. So where does that leave us as we head into the new week? The main takeaway is that this isn't just a story about a stock, it's about a shift in who gets to participate meaningfully in shaping a company's destiny. Eric Jackson's Rising Dynasty speech might sound dramatic, but it reflects a real trend. More and more individual investors are deciding not to hand their money to intermediaries but to invest directly in the companies they believe in, to follow management closely, and to hold through turbulence. That's exactly what's been happening with Opendoor. And now, as institutional validation arrives and as the company itself signals bold moves ahead, the OpenArmy has a chance to turn that patience into influence and, potentially, outsized returns. If you've been here since the stock was under $1, you've already lived through the hard part. If you're new, you're stepping into a community that has done its homework and earned its conviction. Either way, the key is to stay rational, stay informed, and remember that long-term investing is about process, not just price. The week's volatility is just noise against a bigger backdrop of leadership change, product innovation, and now high-caliber institutional interest. That's why today's video isn't about a price target or a one-day move, it's about a movement, the shift from being passive participants to being active stakeholders. And that, more than any single news item, is what makes the Opendoor story worth watching. As we look ahead, the question isn't just what the next earnings report will show or whether the stock will be up or down tomorrow. It's whether the OpenArmy and the company can continue to build something durable together, a platform that changes how people buy and sell homes and a shareholder base that proves retail conviction can be a constructive force in corporate America. That's the story I'm interested in telling, and it's why I think the Rising Dynasty theme is so powerful. Because if you zoom out, what's happening with Opendoor could be a preview of how investing itself evolves in the 2020s. More direct, more engaged, and more aligned between the people who use a product and the people who fund it. That's bigger than any single ticker. That's a movement.